We've come to the end of the Q2 earnings season with most of the companies going ahead and declaring their quarterly results. Now, when we're talking about Q2, as we've been highlighting throughout, it's actually been quite a strong quarter, especially when it sees and when you're looking at the top line growth across the companies, across sectors. What has actually impacted the entire earnings has been the fact that gross margins and EBITDA margins have seen severe erosion due to rising inflationary pressures, rising inflationary costs, and this is something that has ensured that a lot of the companies are actually struggling with the kind of margin expansion that they were typically enjoying. So while there is top line growth, there has been an impact on the profitability level due to inflation. Now, on the back of this particular Q2 earnings season, Sunil Tirumalai of UBS India has written a note detailing and his analysis on the Q2 earnings season. He's saying that the Q2 earnings result season wasn't bad at all on a headline level. Out of the top 100 stocks, 44% of the stocks managed to beat consensus operating profit estimates. 64% beat EPS estimates for the September 2021 quarter, and bigger earnings beats were seen in the commodity as well as the utility sector. Due to lower provisioning costs, banks no longer are dragging on the index earnings. What he is saying is that the Nifty EPS showed a 30% two-year CAGR for the first half of this particular year, and what he is saying is that the operating profit has flattened for large caps over the past 3 quarters. Balance sheet at this point of time are actually reflective of the kind of benefit that they've seen at the time of the pandemic, and they believe FY22 flattening, but FY23 continues to inch higher, especially when you're talking about the EPS estimates. Utilities, financials and metals delivered almost negative surprises to the markets. EPS upgrade momentum was higher in commodities and in IT services. When you're talking about the breakdown in terms of how exactly sectors performed, we started with the information technology pack, the IT pack. Results were resilient, results were strong. A lot of the companies did face attrition, but despite that managed to grow top line growth at a very steady and strong pace, and a few companies in fact also managed to go ahead and increase their guidance in terms of revenues and how they would be faring for the rest of the year. When you're talking about the other export sectors, pharma this particular quarter was quite weak. A few of the companies in fact trimmed their guidance or reduced or removed the guidance totally. We are also talking about banks. Banks at this point of time are actually doing quite well, no longer the kind of negative impact that they had as far as the Nifty estimates or the index level numbers are concerned due to lower provisioning costs. Overall, a good quarter, but input cost pressures and inflation is something that needs to be watched out.